Hello everyone, welcome to my YouTube channel. I am starting a new course on valuation. In my YouTube channel, I'll give small episodes so that everyone from my professional fraternity, if he is a chartered accountant or a cost accountant or any business owner or any director or from the financial world can utilize my resources or can be helpful. I'm just thinking that this will be helpful for everyone. If you find this helpful, please give a thumbs up for the video. If someone wants to see this video and do you know them, please share the video to them. Please subscribe to my channel so that you can watch more of my content. Let us quickly jump into the topic. So this is about valuation. I'll divide this entire concept into 5 chapters, or you can say 5 subtopics. Introduction to value, fundamentals and foundations of value, valuation techniques, mergers and acquisitions with respect to valuation, and few special scenarios, whatever in the case that are in our scenarios, they'll be there. So let us get into the topic. So the first topic is introduction to value. What is the meaning of value and how many types of value or how many kinds of value are there? So let me start with meaning of value. There is so much in the value word. There is an unknown author who has given a definition, or you can say it's as a special sentence or a quotation. A value of anything will come only if it's valued. I think I have not told this properly. A value has a value only if its value is valued. So we have to value something to get its value. There are 4 kinds of value or 4 different context meanings of value. Contextual meaning, contextual meaning of value. Value in use, which means a person would derive the value by using the article. So maybe the stylus with which I am writing on the tab. So the value of the tab or the value of the stylus is dependent on how I am using it. So a person derives the value of a particle or of a thing by its usage is called as value in use. There is something called as value in exchange. So value in exchange refers to the value of a product or a service or the value of anything either measured in money or money is equivalent for being exchanged with other product or other service or other anything. Let us say, for example, you want to go to market and buy 1 gram of gold. So the 1 gram of gold is costing you around today is 17,000 change. So the value of 1 gram of gold for exchange or value of 1 gram of gold in exchange is 17,000 rupees. Also, let us think like this. I have 1 kg of potatoes and my neighbor in the same building is growing tomatoes. I want tomatoes for cooking a curry. So what I do, I have took half kilo of potatoes and went to my neighbor and have asked, can you give me half kilo of tomatoes? So the value of half kilo of potatoes in exchange is equivalent to the value of half kilo of tomatoes in exchange. So that is called as value in exchange. Next one, value in store. Value in store refers to the value of anything which can be stored, or you can also call that as a wealth. So the value in store means the value of any product, the value of anything that can be stored or that can be preserved. So this value in store is applicable only for durable goods, which has usage over many periods. Let us say rice, which can be stored and which can be used for eating, wheat, gold, which can be stored and which can be used for later period of time. So value in store means value of anything or value of any product which can be stored with us and which can be used in the future periods. Okay, let us go to next concept. The last contextual meaning of value is value of a thing in special situations or valuation in special scenarios. The value of a product or the value of a service is purely dependent on the circumstances and time frame that which we are existing. Let us say in current days, the value of fuel in black market or the value of gas in black market is slightly increasing because of the West Asia war scenario. Or let us take it in the other manner. The value of the raw vegetables is more than the value of the ripened vegetables. The ripened vegetables shall be consumed in very small time frame, which has low shelf life. But the value of raw vegetables can be preserved and can be used after some time. So definitely the value of a product or the value of a item will change drastically based on the circumstances and based on the situations that we are present in. So these four are the contextual meaning of the value. So let us look at some special terms which ends with value. Let us say fair value, intrinsic value, investment value, synergy value, and market value, legal value, accounting value, etc. like this. So let us start one by one so that you will understand what I'm trying to tell. Let me start with the fair value. Fair value is referred to a value which is agreed between a knowledgeable buyer and a knowledgeable seller of any item. Let us say I wanted to buy this stylus from the Xiaomi. So now Xiaomi has told that the value of the stylus is 6,000. So the seller has knowledge about the stylus, how to make it or how to sell it and how it can be used. And the buyer, I go to the seller and I also have knowledge about the stylus, how the stylus can be used, how it can be, how it will work, what are its uses. So I am a knowledgeable buyer and Xiaomi is a knowledgeable seller. So both of them agree upon the price, maybe 5,500 or 6,000, whatever be the price. So that price that we agree upon is called as a fair value. Let us compare this with the Value and contextual meanings. Fair value will always come into picture only in value in exchange. Fair value refers to value in exchange as agreed by knowledgeable buyer and a knowledgeable seller on a specific product or on a specific item and enter into a transaction. So that's the first concept of value. Let us look at the second concept, intrinsic value. Intrinsic value refers to inherent value or the true value of the item, may be intangible, may be tangible, or any factor underlying such item. Let us say I have iPhone. Now, the intrinsic value of the iPhone is the value of the asset arrived based on both tangible factors as well as intangible factors. The iPhone used by me will definitely deteriorate its value because I have bought that for 60,000. I have used it more than 2 years. So if I go to sell it, or if I value the product per se, like how much value it will be, then maybe it will be around 30 to 35,000 because I have used it and the value is deteriorated. Let us say I have 20 grams of gold and I have been gifted 20 grams of gold on the day of my marriage. So I'm holding it as of now. On the date of marriage, when the gold is gifted to me, it is only 1 lakh rupees. 20 grams into 5,000, 1 lakh. But today, if I value the 20 grams of gold, it is 20 grams into 17,000, maybe approximately 3.5 lakhs. 17 twos are 34, so 3.5, 3 lakhs 40,000. So the intrinsic value of the 20 grams of gold today is dependent on the tangible and intangible factors, which means the value in exchange as decided by the bullion market in the India. So that is a intrinsic value. Again, intrinsic value is value in exchange. Also, intrinsic value can also be a value in special circumstance because the valuation, if you badly want to sell the asset, is always less than valuation of the asset that you're gonna hold it. So that's intrinsic value. The third concept, let us look at investment value. Investment value is a purchase price for the investor. Like if an investor wanted to buy something, then it is investor's value or investment value. It is also called as cost in the accounting terms. Let us say I wanted to invest in the land or I wanted to buy the land. So if how much amount of cost that I incurred to buy the land is called as investment value. If I buy shares, how much amount of cost I incurred to buy the shares is called as investment value. So let us look at the now let us see the fourth concept, which is called as synergetic value. You already know the meaning of synergy, which means if we are working together, then we can achieve more, which ideally, if we convert into numbers, 1 plus 1 is more than 2. So synergic value refers to the combination of two or more assets can be sold at more than the combined standalone value of the assets. So let us, so the combination of two or more assets will result in more than combined value of combined standalone value, I would say. Standalone value of assets is called as synergetic value. Let us look for the next concept, which is called as market value. Market value refers to the asset that which can be sold in the market. So there are multiple types of market. We know monopolistic, oligopolistic, duopolistic, competitive market, etc. But here the market value refers to market price in any type of market for which the product can be sold is called as market value. Let us look after next concept called as legal value. Valuation is mostly done to arrive a value in a better eyes of law. Like if we cannot sell something in the eyes of law, then the value of the product is ideally zero, because the consideration in the eyes of law shall be the consideration of the product. We will ignore real estate assets here, because in real estate the legal value of the asset are or the consideration of the asset comprises of two components: how much amount of consideration that is awarded through law, and sometimes there is more consideration more than paid for the asset. So that is a different scenario. But in the same scenario, let us say if I am buying a land for about 25 lakhs, and the sub-registrar value or the rate card value of the asset is only 22 lakhs, I am paying 3 lakhs extra for the product. So the 22 lakhs is called as legal value, and the additional 3 lakhs is called as premium, market premium. So 22 plus 3 put together is called as 25 market value. So I hope you understood the concept. Legal value is only 22 lakhs, 3 lakhs is a premium, and 25 lakhs is a market value. Let us look at the last concept, which is a accounting value. Accounting value or book value refers to carrying cost of any asset in the books of assets. So accounting value refers to book value or carrying cost of the asset in the books of accounts. In books of accounts. So ideally it is cost minus depreciation. So this is the first concept, which is introduction to value, and we have learned contextual meaning of value about the four contexts, and we have learned 7 terms: fair value, intrinsic value, investment value, synergy value, market value, legal value, and accounting value. So let us meet in the next topic. Thank you. If you find this useful, give a thumbs up for the video. If someone wants to see this, share the video with them. Subscribe to my channel. Thank you very much.